Hello, good day everyone. How are you all today? Welcome to another video. My name is Hussein and I'm Forex Optimum Broker Financial Analyst. I'm back again, once again, to bring you all new updates in the financial markets. Then starting off first from the first week of May was of a chaotic nature for financial markets. Stock markets were under fragmented pressure as US technological sector was sold off with Nasdaq losing more than 3% in 4 days. And investors switching to cyclical companies shares with new highs for the later. Dow Jones Index is also peaking up 0.7% this week. Rational explanation on for such capital flows would be that they are not many, as somebody is referring to commodities price hike as a major driver for shares of cyclical companies. Somebody blames US-China increasing tensions. However, all these excuses are seen flimsy. So, recent data of economic activity in the United States are pointing in the other direction as business activity is service sector is increasing. In the production sector, where cyclical companies are represented, in the opposite, business activity is dropping. Fundamental background became less favorable after Fed's member Robert Kaplan made strange hawkish statements supported by Treasury Secretary Janet Yellen, though it could be just investors' fear and wishful thinking. But why shares prices of many US companies that reported outstanding first quarter results are not growing? Instead, shares prices are falling. Hedge funds reported maximum shares sell-off since 2008 in the last 3 weeks, and all is this just on the edge of record economic growth. So, maybe hedge funds are not sharing positive forecast of economic growth, or the knowing somebody about that some of the kind of affairs mature and are selling pressures shares before it arrives. Looking at gold prices and sharp decline in treasuries yield, this scenario may be not far from the reality. Although positive forecast could be misleading, in line with an economic theory of mistakes that says that huge stimulus measures along with money printing could lead to high inflation that is treated by economic entities as economic growth, leading to overheated expectations for a short period. So companies may hire excessive workforce waiting for rising demand. Consumers may spend more waiting for wages to rise. So we may have a combination of factors including some possible economic decline that scares hedge funds. In this regards, we should closely monitor S&P 500 index performance. If it slips below 4,100 points and holds below this landmark, a possibility 15 to 25% correction to support level at 3,350 points will rise significantly. US labor market data that is due to be published today is about non-farm payrolls importance. Our statistical modeling confirms that non-farm payroll could be presented close to 978,000 new jobs. The unemployment level may be worse than expected to 4.9 to 6%. Nevertheless, it is positive data that may pressure the Fed towards tighter monetary policy. So, better economic data could be worse for the market and it may trigger stocks sell-off. Crude market had no major news this week. Expect crude reserves in the United States that contracted by 7.9 million barrels. That puts Brent crude prices to $70.10 per barrel, dollars per barrel, with rolling back to almost $68 per barrel. Gold prices jumped to $1,818 an ounce on Thursday, with a possible target at $1,850 per troy ounce after 10 years Treasuries yield slipped below 1.57%. The greenback is feeling uncertain ahead of the non-farm payrolls data release. The Euro USD is heading towards 1.2290. The GBP USD is hovering around 1.390 after Bank of England left monetary policy unchanged on its meeting on Thursday. The pair is likely to remain within the current trading range before non-farm payrolls would be announced. If the pair rises to 1.3970, it could be an interesting opportunity to open sell positions. In the alternative scenario, the pound may descend to 1.3810 against the greenback. The last but not the least, which is USD JPY will be also waiting for non-farm payrolls that are close to 109 level and may above to go towards 109.70. A good sell position or tumble to 108.40.